Hey, what's up, everybody? I just wanted to go over a video that kind of what we look for when it comes to entries, reversals, kind of a break of structures, and kind of what we look for when we think price is going to reverse and where we might take a trade. Of course, I would start off maybe at the 1 hour time frame and just look at structure, of course, and kind of see how it's coming. You could even go back up to the 4 hour, 8 hour, even the 1 day, and look for some order blocks. If there's some order blocks that are close to price, there's a higher probability it may reverse there. But I just want to kind of show you what we look for in the market structure when we're actually looking for an entry on a trade. So you see with UCAD, I'm on the 1 hour. It's obviously making a trend down. So we're looking for a place that it may start to return and reverse and run back up. So I've got some stuff marked up here. I just want to kind of show you what it was looking like on the 1 hour. But then I'm going to actually break down. You can go to the 15-minute and kind of look at that or whatever too, if you'd like, kind of see what price has been doing. But basically I'm just going to go ahead and break it down to the 1 minute. This is what I'd be looking for on my entry anyway. I'd be looking for the smallest pip stop loss. So basically, let me get zoomed in here. Okay. So, every time the market makes more than a 2 consecutive candle pullback, we consider that a lower high. And then, as it comes down, a lower low when it starts to come back up. So that's the market structure I'm looking for. I'm looking for it right now. It's still making bearish market structure. It'll come up and then it'll drop, come up and it'll drop. That's kind of, we're kind of watching that happen. So you either want to take a trade off of this trend or you want to find a very good reversal zone. So like I said, I've got some stuff kind of already marked up. So you'll see here, it made a multiple candle pullback, made a lower high, 2+ consecutive candle pullback to make a new leg of market structure. So a lower high, this was the last one here, here, and then up here. So it's working its way down. So as it starts to drop, what you'll notice is it comes into an area where price starts to kind of pull back. This is the 2 candle pullback. So this could just be moving up and coming down again and just making that structure. But what we start to look for is short-term highs and signs of weakness. So as this wick here, I should say this candle broke this wick, that's a break of a short-term high. So I just went ahead and marked it up here. But the short-term high was when it broke this candle. And then every time it breaks, every time one of these candles breaks another wick, we consider it a sign of weakness. Breaks this wick over here, this candle over here, sign of weakness. This candle pushes up, it breaks this one. Eventually it breaks this one. I don't want to mark it all up, make it too confusing, but you see what's happening. It's starting to break starting to break some candles on the left, some of the candles and wicks. This is a bearish order block. It goes through that, which is a good sign. But it still hasn't broke market structure. And what I mean by that is this is the last lower high. So until it actually breaks this structure right here, it's not really, we're not 100% sure. This could just be a complex pullback and then it tank again. And so we're looking for it to break the last lower high, that last 2+ consecutive candle pullback. So if I zoom out, you'll notice right over here, what does it do? Boom, breaks up right above that lower high and then starts to come back down. So as you keep zooming out, and this is on the 1 minute, so this may be, this is, it was like 2:39 and this is 6:30. So, this is basically almost 4 hours later. But at some point this breaks, and you could, once you see it break this structure, you could come back down into this main order block that I've got marked up down here, because this is a bullish engulfing order block. Okay, so you can mark this up down to the wick. I marked it to this wick over here actually, just to make sure. But you've got that box there that you can mark up, and that's where you think the price may retrace back to. Now it could turn at one of these other order blocks, but this is the main one where it started working up, and this is where you see a lot of bullish candles going away. So it goes up and it breaks that market structure, and then eventually it comes back down. Now, again, you can come in and you could, if you wanted to, you can add an alert up here, something like that, and just type down here at the bottom if you wanted to, coming back into an order block or whatever you want to do to remind you. Okay, and you create that. So a little bit later in the day or whatever, it would come back down. It would break that. You'd get your alert, and you could come in and start looking at it. And you'll notice once it gets to this point, it starts to show more bullish signs. So this is where you would want to take your trade. And you could wait if you wanted a little bit, you'd have a little higher stop loss, but you could wait until it breaks outside this box or something to make sure, if you want to wait for a confirmation to see that it is breaking up above these short-term, it's making more short-term highs by breaking these candles. So it kind of tells you it may start to continue to reverse, go back up. So basically, you could have taken your entry if you wanted to here. It's a little early, but you'd want to see what happens if it starts to break back up. But you basically had 1, 2, 3, 4, 5, 6, 7, 8 minutes, or so, 9 minutes if you wanted to get in here to take this trade. Now, if you wanted to get back below that order block, take the ruler. Let's say you got in on one of these candles here, you come down, that is about a 4 pip stop loss if you wanted to be safe and go a little bit below that. If you got in a little bit late, let's say you got in when it broke up here, that's 5.5 pips. So you'd have to adjust your risk to reward on your lot size or whatever to make sure that you're not risking too much on that trade. But basically, you've seen it break this break of structure up here, this lower high, and it starts to, and then it comes back down and retraces in this order block. And then what happens? Price goes and goes and goes, and it just continues to go. So, and it could potentially, you definitely want to look back once it breaks this structure. You want to look back at other order blocks, and you want to say, okay, there's a possibility it could turn around again. Excuse me. There's a possibility it could turn around again and go back down with this order block here, or this order block here. So you could potentially put your take profit right here, okay, if you wanted to, just to be safe. So you caught this trade here, and it ran up to basically in here. You probably would have pulled it in here if you wanted to, especially when you saw it drop back down. But that would have been, how do we do? So we got in about right there. Stop loss would have been here, about 4.5 pips or so. Take profit would have been up here. So basically 25 pips. So you just caught a 1 to 5.5 risk to reward trade. So you got your 4.5 pip stop loss, your 25 basically pips of profit. Your risk to reward ratio is 5 to 3. And this here is it's called a long position. It's right over here. Long position, short position. So if you're taking a short, if you're taking a sell, you could put this up and see what it is long, up. That's kind of what you can do to look at the risk to reward ratio. So basically, you could go ahead and set this to take profit up here. If you only wanted to just go for a quick 1 to 3, I mean, a lot of people just like getting in and out pretty quickly. So if you want to take a 1 to 3, you could have just put your take profit right up here. But that wasn't even the break of structure. So you almost think at least it's going to come back up to that, if not more. And you see what happened here. I mean, it just shot right past it again and then worked back down and then went again. So, at a minimum on this trade, you might would want to just at least take it at the break of structure. And that would have been 19 pips, a 1 to 4 risk to reward ratio. So still would have been a pretty good setup. But again, this is what we look for. You always want to go back and look at the trend and see, it's best to trade with the trend. But if you're looking for reversals, you're looking for wanting to run back up. Again, the daily 8-hour and 4-hour order blocks are pretty powerful. If this was by chance a 4-hour order block in the past, that would be another thing that you could look at to say this might be a good trade. Another thing you could use is once you get your breakup structure here, you could come in with a, excuse me, can't find it, sorry. So you could come in with a fib, go from there to the breakup structure, and then you'd want to see it pull back at least past 50%. You see, I know it's kind of hard to see with all that there. I wish I could make that easier to see, but you'll see the numbers over here. You got 0%, 50, 618, 71, 786, 886, and 100. So you started at the 100 from low point to high point, and that gives you how much of a retracement it's going to come back. So you want to wait till at least comes back to 50% retracement. A lot of times this 786, 886 zone is like the real powerful zone. So it can come back here. These numbers for this strategy the numbers don't really matter. All that matters is the 0, the 50, and the 100. I have these here just because I like to look at the numbers. Just another strategy I learned a while back, but really anything below that 50% shows you that it's pulling back into a good range, and that it's possibly going to continue to go. So you could also throw that fib up there, and then when it came back into the order block, you're past 50%. That just gives you another thing you can look at. But this is basically kind of what you're looking for. You're watching that trend. Again, it's best to trade with the trend, but you can look for these reversals too, especially if there's like a 4-hour order block that's like 50 or 60 pips up, or 8-hour order block that's 50, 60 pips up. And there's one here in this area, especially, there's a good chance it could bounce off of this one and run back up to the other one. It could stop somewhere in the middle. So you got to make sure you got some take profit areas that you're comfortable with, or whatever you would want to make. But as you're looking for this market structure, if it starts to pull back and you start to see it break several other candles over here that's showing a short-term high, signs of weakness as it breaks those, and then once it finally goes up and breaks the structure of that lower high, that's when it starts to reverse again. So once it breaks that market structure, breaks that leg of market structure there, this downward leg, once it breaks above that, that's where you're kind of looking for that that possible reversal back down. Now, I guess, it could just keep going and keep going and keep going. But if you notice it has a break of structure and then it retraces back into this area that started showing the bullishness, that's where you would want to probably take your trade here. So it'd be too hard to know here if this is worth a trade, because this could just be a 2 or 3 candle pullback and a continuation. So you want to see it work up, break multiple candles over here, and break that structure there. And even if you could go back to like the 5-minute, something like that, and kind of look and see and how it's breaking structure there. So in this one, this wasn't a 2 candle pullback on the 5 minutes. You would need to use that 1-minute structure. You might maybe look at the 3 and see what that does. Let me get my auto back on. That's the problem. So it was a 2 candle pullback on the 3-minute also. And then it broke that structure. So you can look at the higher time frames to see, if it's showing more confluences by breaking higher time frame market structures too. But you definitely want to take your entry, if possible, off the 1 minute, because it really kind of narrows down that order block. My goodness. If you were to come in here and look at this level here on a 15-minute, this order block could be this big. And then you're having to set a stop loss that's 10, 11, 12 pips. And that might, that's just that you have to take a lower lot size. You wouldn't make as much profit. But if you can come down and really fine tune it into that 1-minute order block, then it coming back to that area, or you think it's coming back to that area. And after it shows that break of structure, and it comes back into that area, there's a good chance that it will continue up, because this kind of gives you an idea that it's starting to turn bullish as it breaks that last leg of market structure. So that's kind of what we look for entries. We use higher time frame order blocks if we can. And something I've shown in other videos, you can look back at previous daily highs and daily lows for reversal zones. A lot of people, I try to trade the very start of the New York session, the first hour or so, but you can look back at the London session right before, up to the New York session, up to that New York-London overlap, and look at what London did highs and lows too, because a lot of times the New York markets will want to get in and push price back into that London zone and then let it continue on. They kind of want to get the best price. Whatever London got in at, they want a similar price, so they will push it back up to get in at that price just for it to continue down. So there are different times of the day that might be better. Some people prefer the Asian sessions. I guess it's a lot of your trading style too. But again, this is just kind of what we look for when it comes to break of structures, short-term highs, signs of weaknesses. You just want to look to see if this all happens. This is giving you a signal that it could very well reverse. So from that downward structure back into an upward structure, and you see that's exactly what it did. So when you go back out on the 1 hour, you'll see it made this high, came back down, excuse me, made this high and came back down and then started working back up again. And you'll see right before the close of the market, or that last day on Friday, excuse me, everything just tanked back down again. But it came back down into these same order blocks. Notice this 1 hour order block right here. This is where our last order block was down here. The price came back down, tested into that 1 hour order block, and now it's starting to work back up. And it could even come into here again and keep going. We've got a lot of missing price up here. So there is a potential that it could run back up again. So anyway, just the way we look at it, that I look at it when I'm looking at new trade setups, trying to see, if it's about to reverse, if I can get a good entry or something like that. So anyway, hope this helps. If y'all have any questions or anything, let me know. Much love.